Hey everyone, welcome back to Chip Stock Investor. I'm Kasey.
And I'm Nick. Hello.
We're going to be talking about AMD today. We were pretty critical of AMD last year, but we're taking a look at it again. Let's see how they did in this most recent quarter.
Yeah, and this discussion on AMD is actually part of a bigger discussion over on Semiconductor Insider, where we discuss AMD, Arista Networks, AppLovin, and Fortinet. Check that out. We are running a 25% off sale on an annual membership to Semi Insider.
You can find that discount code in the video description below only until May 15th. Everybody's been hyper-focused on AI and the hyperscaler CapEx, and AMD did give us some insight into that. We'll talk about their AI and accelerator growth expectations, but the real story is about what we've said all along, those profit margins. And we'll finish it off with, is it finally time to buy AMD stock? All right, and here's our end market segment chart. Accelerated computing, of course, has been dominating the semi market with pretty much everything else not AI in a downturn.
And of course, because everybody has been hyper-focused on the accelerated computing part of AMD, like the MI series, the Instinct series accelerators, the GPUs, the MI 300 series pictured here, we're going to discuss why, again, that continues to be a real snag, especially for retail investors that are hoping that this is going to emerge as a big, giant NVIDIA competitor and will just make so much money playing second fiddle to NVIDIA. There are some serious issues with that assumption. So let's break it down a little bit. This is from CEO Lisa Su. 3 months ago on the last earnings call, she said there was going to be the sequential decline in both the data center segment in Q1 2025, and then the client business, that's the PC, laptop, and gaming, we're going to be down. Embedded, that's the old Xilinx business, the FPGAs, we're going to be down a bit more than that. And here's the numbers that they said to expect: 7.1 billion at the midpoint, and expect margin expansion. That was really the big focus. So where was the margin expansion going to come from, if not the data center business?
We're going to show you how AMD did during this quarter with a chart from our friends over at finchat.io. They're the sponsor of today's video.
Finchat.io has a fantastic platform for analyzing potential investments. We especially like the tools like this one on this chart, where you can see the key performance indicators, KPIs of companies like AMD. Helps get you a great visualization of where the business is at, what's driving the stock price or potentially driving the stock price higher, and helps you really drill down into what matters most to you as a long-term minded business owner.
FinChat also has a great Copilot or AI chat tool that you can use to go through these earnings calls and transcripts, 10Ks, you name it. You can go through them in a very efficient manner and extract those key points from those documents and earnings calls. You can get 15% off any paid plan with the link in our description below, finchat.io/CSI. That's 15% off any paid plan with the link on the screen or in the description.
So let's break down this KPI chart for AMD. The data center business, 3.67 billion. So nice, nearly 60% year-over-year growth rate there. In the client group, we got a nice recovery. We'll break that down a little bit further. And finally, in orange there at the bottom, embedded, it looks like we are nearing a bottom, and that segment is troughing. And of course, that's going to follow the same end markets we've been talking about elsewhere: auto, industrial, communications networks, that sort of thing. Here's that client group. The blue bar is the total client and gaming revenue. And we did get a surprise. They said this segment was going to have a sequential decline from Q4, and it actually increased a bit. And the reason for that is the Radeon discrete GPUs for PC and laptop. That's in the green portion on the right. So the green and purple is a breakdown of the total client and gaming revenue. The Radeon GPUs sold better than expected. Still a big downturn in the PlayStation 5 and the Xbox revenue. And then client, everything else that's basically CPUs, also continuing to do quite well and recovering year over year. So implies that they are still taking market share from Intel in what is, unfortunately for Intel, their most important segment these days. But let's see what this did for the profit margins, because that's what is really going to move AMD stock at this point.
On the right, you can see data center 25.4%, client and gaming came in at 16.9%, and embedded close to 40%. Year over year increase on that client and gaming segment, which is a good sign as well.
And the other nice surprise here is the data center segment. Of course, the headline number, nearly 60% revenue growth, is all fine and well. But notice the return to more dramatic operating margin improvement in that data center segment in Q1. So $541 million last year, $932 million this year. And here's what it did for margins overall. Here's a GAAP basis operating margin for the whole entire of AMD was 11%. And on an adjusted basis, 24%, which is a more modest increase year over year and a bit of a sequential decline. So there are some things to be concerned with here on that most important metric of increasing profit margins. And there's going to be some headwinds to further progress and further upside for AMD as a result. So they did have the inventory charge, just like NVIDIA did, because of the export license control, selling those MI Instinct series GPUs to China. But even if we exclude that inventory charge of $800 million for the Q2 guidance, it still implies adjusted earnings per share of about 90 cents, which is a sequential decline from Q1, and a much more modest year-over-year increase of about 30%. So we're still not seeing the more dramatic margin increases that we need to see to really get AMD stock to take off. This is still the primary issue for this company. We can't just assume they can just catch up with NVIDIA and rake in massive amounts of profit as a result. Because as hopefully everybody here knows by now, AMD isn't just in second place behind NVIDIA. They're more like probably in third place in the data center market, because Broadcom's ASIC business, the custom silicon segment, has probably become the second place accelerator business for the data center markets. If you're playing second fiddle, and especially if you're third in line, you have to have really robust profit margins if you really want to lure in Wall Street on this story. And it's just not happening quite yet.
Here's a look at their balance sheet. This doesn't yet reflect the sale of that ZT Systems US manufacturing business, but a deal should be announced soon. Over $7 billion in cash and short-term investments, and around $4 billion in debt.
So this is a decent balance sheet. They'll have a little extra cash after ZT Systems gets sold. So they have a full tank of gas, and they have a direction to go to use that full gas tank on. Let's just do a quick update, a quick refresh on the reverse DCF. Here's the assumptions we went through back in February when we expressed cautious optimism. And here's what's changed. Especially take a look at the 50% per share profit growth for the next 2 years and a 7.5% terminal growth rate thereafter, with the year-over-year increase in earnings and a more subsequent stock price drop. We've just dropped that 2-year growth rate to about 35%. So the bar has definitely been lowered, but expectations are still a bit on the high side. And just need to reiterate here, this cannot be an all-out growth story. AMD needs to get higher profit margins to coax Wall Street in on this story and to command higher stock prices. And the way they're going to do that is being laser focused on the data center business and landing deals that make financial sense, not just simply competing with NVIDIA on technology, And then on the PC business, that really continues to be the unsung hero because that is a place where they are taking away market share from Intel. And it can be a much more profitable business as that market continues to stabilize. Embedded is a whole nother story. Embedded FPGAs look like they're potentially on the mend, but profit margins, everybody, really just no joke here. AMD cannot be just an all-out high growth stock that everybody hopes and wishes it could be.